the big news recently is that the Fed is stress testing for negative interest rates. This doesn't necessarily mean that these are going to happen, but it's a scenario that they're kind of just seeing what would happen, right?
Right. Right. So, and they're basically saying it could be a reality here, and that's the concern is, let's say a recession comes, and typically recession comes, what you do, at least for monetary policy, is you start cutting rates. Well, we're already close to zero or at zero. So the only place to go from there is negative. And obviously there's a big concern now, the banks are only bigger, the biggest banks are only bigger. And so what would this do to their income statements and balance sheets if rates actually go negative? It's kind of one of those things where they're just trying to be responsible and get ahead of the problem should it become one.
Right. So like if we get to the point where this is occurring, there are a lot of other problems happening. Like this isn't going to come out of the blue. Like Janet Yellen isn't going to wake up one day and be like, you know what? Today we're going to have negative interest rates. Like this is not going to happen.
Right. So things have already
coming.
gone terribly wrong, especially for the banks, because the point at which we have negative interest rates, they would already be paying a positive yield likely on deposits and investing into securities at negative interest rates. So they're already losing money. This is like problem number 5 that you encounter, right? This isn't like, oh, you just wake up one day and interest rates are suddenly negative. Things have really gone badly.
Yeah, and it's kind of doubtful right now anyway. Like the job market is pretty strong. The Bureau of Labor Statistics released its job report. Labor market's pretty strong. Unemployment is hovering around ideal levels. Some people say that we're going into another recession right now. I don't know. It's kind of hard to tell.
So that's kind of the thing too, is you have to put everything in perspective. And one of the things that is kind of difficult to consider is that things seem to be fairly rosy in the United States, and we've never had things to be this kind of rosy in the United States and rates to be this low. It's kind of weird. But interest rates are kind of a global issue. So if rates are super low in Japan, they're not going to be very high in the United States because investors are going to say, well, forget Japan, I'll take my money to the United States, right?
Right. The other interesting thing about negative interest rates is that they're not even sure if it's legal to have negative interest rates in the United States. Like according to the Federal Reserve Act, which kind of established the Federal Reserve Board's authority, they're not sure if they can declare negative interest rates anyway. But it's just kind of one of those things that they're like, we should, I guess, kind of test for it just in case it does turn out it is legal.
That's fascinating. I hadn't even encountered that. I hadn't even pondered the fact that it might not be legal. That's a whole nother slew of issues. Great. So now you throw politicians in the mix too. Fantastic.
Because that always goes great with fiscal policy. So what would this mean for consumers if a negative interest rate environment did happen in the United States, which, as we've established, is not hugely likely? I'm not going to say 100% unlikely because, as we'll get to it, forecasting is hard. But what would consumers want to do?
Well, I think I think it's hard to say. So we're dealing totally in theoretical territory here. So all bets are off. But at least so far, if we use foreign countries as an example, I don't think that if we have negative interest rates here in the United States, that consumers will have to deal with a negative interest rate on their bank account. So although this will be an issue for banks, it'll be an issue for a lot of huge corporate. So Apple, they have $100 billion, whatever, overseas. They have to deal with the effects of this. But for individuals, I don't think that it will come to an issue where you have to tolerate the idea of having $10,000 in your bank account today and next year only having $9,900 because of a negative 1% interest rate. I don't think that is within the realm of possibility. At least I hope not.
Yeah. And if it is, then we're probably both fired anyway. So
yeah, I mean,
we'll get what's coming to us.
Off, we're all, I have bigger problems to deal with. Everyone will have bigger problems to deal with than that. And another thing, too, is that you have to think about is that banks are fairly resilient. That's kind of a joke, but they are fairly resilient in the sense that, say, a Wells Fargo, they make 50% of their income from interest rates, but they also make 50% of it from fees and things like that. So, there's some give and take, right?
Right.